Highlight of the day, the old punch a guy in the face story. I'll tell it from its beginning. Very simple. You punch a guy in the face and he doesn't even blink his eyes. You're probably going to run the other way. What does that look like on a chart? If a big buy market order comes in and price doesn't flinch, it doesn't go up, it actually goes down. That's bearish. That's all. Keep it simple. So watch this blue box that comes in, 100 lot or more. We put a blue box around it. Look what price does. It not only goes below where that buy market order came in, but our laser went red to green. That's just get short if you're bearish. Don't get long if you're bullish. Get out if you're long. That's it. It's a tell. It's a read. Let the evidence, when you follow court cases and all this detective stuff, whether it's fictional or non-fictional, let the evidence take you where the evidence takes you. That's the BS they always tell you when they're trying to defend what they found. But it is actually true with respect. That's what they're supposed to do. They're supposed to let the evidence takes them to where it's supposed to take them, meaning you get a witness that says this, makes you look at that witness. And you talk to that witness, and they say something that makes you go to this place. Let the evidence take you where it's going to take you. So you get a buy market order and you get a green laser, price goes down. Now, something else interesting happened. And I started to, oh no, I didn't draw it right there. I drew the equation up. I illustrated the equation right here. What does this mean? Up triangle plus a green laser equals nothing or zero. What do you mean it equals nothing? Well, a blue triangle generally means upside. But if you have a green laser means downside. So when you get a combination of the two, it means nothing. And we get this combination right in here. You get a blue triangle, but a green laser. So if I fast forward it, you get nothing. You get sideways to kind of lower trade for a while. But if I back it up and go over what we just saw, the rejection of a buy market order. All right, let me back it up. Rejection of the buy market order. Take a look right here. It's not the buy market order, it's what price does after it. And then look at these two numbers. You see how the 41 gets bigger than the number on the right gets bigger than the number on the left? That means more longs than shorts. It was red, 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 and then green. That's got to get you short if you're bearish. It's got to get you to cover a long if you're long. And that is giving you this probability up here instead of down here when it would be too late. And we can go over more longs in the market than shorts means more future sellers than future buyers. You want to do the equation again? What do longs equal? They equal future sellers. So if you have more longs than shorts, then you have more future sellers. This is what you need for the price of anything to go down. So how do you recognize that? How do you build that case? Well, we've got our OPP lasers. But other clues is what does existing buy orders do? See, we're trying to predict future buyers and sellers, future buy and sell orders. It doesn't mean present existing buy and sell orders are unimportant. There's importance there. But what do you do with it? Like, what do you do with a buy order or a sell order that everybody else could see? Because most charting software sees big market orders come in. They might market different, but most software technology offers that. But what most people, so even though most people could see big buy orders and big sell orders, what most people don't know what to do is how to read it, what to make of it. And the question you have to ask after you see a big buy order is, well, what the F does price do? Because what should price do with big buy market orders? Remember, market orders is what moves price. What should the price do with big buy market orders? It should go up. It should go up. Well, what if it doesn't? You've heard me say this before. The clues is when something that's supposed to happen doesn't. That's, I think, where all clues originate from. When something is supposed to happen, doesn't. Something changes. Something changes. Now, all of a sudden, the big buy market order isn't getting priced to go up. All of a sudden, the guy you're playing poker with touches his forehead. Something changed. Maybe he has a tell. And if he does, now you're going to be a better poker player when you're playing against that guy. So how do you become a better trader? You got to read the tells. You got to read the tells on the dome. You got to read the tells on the chart. And with the chart that we have, it filters out all the noise that's irrelevant and puts you in a position to ask better questions, to ask the right questions. What does price do after big buy or sell market orders actually come in? What does a blue triangle mean? Pink triangle mean? What does it mean to have sell and buy imbalances around where the price is? Why is it important to make sure that the orders you are the orders you're using in our math are real? Because so many of the orders that come in and out of your dome are fake, all nonsense. So you have to qualify them. Then you got to measure the ones around the last traded price, but you got to filter those two. And then you compare them. More future buyers versus more future sellers in a triangle would have blue if there's more buyers and sellers who want to buy or sell it, pink if there's more sellers who want to sell it than buyers who want to buy it. And so now you're looking a little bit into the future, trying to find future buyers and sellers. But then the other way to do it is other people's positions, OPP, right in here, over the last 2 minutes and then over the last 60 minutes. That's what we're after. That's where the reads come from, or how you stack probabilities. And then when you put yourself in a position to also understand a magnet where price wants to go for a reason. So if price wants to go up, meaning, or I should say it like this, if there's a magnet higher than where the price is now, and it's a good magnet, then you should be bullish if price is below a magnet. We've talked about what makes good magnets in markets because that's important to develop a bias. If you have good magnets and they're above where the price is, you should be bullish. You should be playing this market from the long side. You still got to have a trigger. You still want to have good locations. But magnets are really important. And there's a lot of good magnets that come from the option market. But you don't have to be an option trader to allow those option plays to yield good levels. And the other thing is, I know a lot of people get into support resistance, and that's fine, but start getting into levels that you are using as an opinion creator. So you look at a level, and instead of saying, well, I think this gray area is resistance, so I'm going to wait till price gets up there and then try to get short because it's going to do this. Now, if you think that's a good level in a magnet, now you could be bullish being long and getting out when it gets up there. You're still a seller, but you're a seller to exit along for a profit already than being a seller to open a short. And there's a difference. And so if you have good support resistance, that's fine. But you want to come up with better levels that you make turn into or have as magnets. And magnet's a good word for understanding that if indeed it's an upside magnet or it's above where price is, then you're bullish. Price is going to get there. And there's, what's the word? There's like really good rational aha moments that you could have for why the price is going to want to go up there.